All right, I'm going to go ahead and get started. Let me first introduce myself. My name is Nikhil Joseph. I head up financial products here at Enphase. At Enphase, together with the hardware, we try to bring you the software so that you guys can achieve what you need to do on the field. One of the aspects of the services that we want to bring to you is financing. What we've done over the past 18 months or so is we've been working with Bank of Montreal, also known as BMO, to provide that financing. We specifically have an integration through Solograph, which you can use today. And we've worked with the BMO team to come up with this financing solution, and they will actually be taking the presentation today. I am here as support, but yeah, Chris, whenever you're ready, let us know.
Yeah, hi, everybody. Appreciate the opportunity. My name is Chris Geik, and I'm the program manager for the Bank of Montreal, otherwise affectionately known as BMO, and Enphase relationship. We have an arrangement with Enphase to offer financing products for the solar sector, and just wanted to spend some time today to go through a few slides and to give everyone a high-level overview of who we are, what we do, what are the benefits for you if your customers finance, what are the benefits for your customers who are considering financing, and then just to go over the process and how it works. So with that, if you could go to the next slide. Thank you. This is just housekeeping stuff, basically, to say, you know, the information here is really just for discussion purposes only. There's nothing should be construed as an offer. All of our products and services are subject to approval, and we don't provide legal or tax advice. And any opinions are our own, and all that good stuff. So happy to get that out of the way, but it's part of being a regulated bank, so had to do that. Thanks for your patience. So BMO Bank has been around for a couple of hundred years. Okay, it's the 8th largest bank in North America. 50 years in specializing in equipment finance. And we cover all 50 states and all provinces in Canada. For the purposes of this discussion, we're just talking about U.S. for now. But we're a big bank, very stable. You can see that the Moody's rating is AA2, which is one of the highest ratings that Moody's assigns. So a lot of impressive statistics here. I don't need to go through every one, but the point is that BMO is very solid, and we have lots of money to lend, and that's you know, that's the purpose of our relationship, is to help your customers get financing and to lend where it makes sense. So this is just so. In addition to myself, Fraser Day is on the line, and he is the inside sales lead. So he does all the transaction work basically up until when documents go out. So he gets the applications, gets them entered, works with credit if need be. But we have a very effective credit scoring model. Applications come in, the software pulls reports, and renders a credit decision. For larger deals, we require some financial information. I'll get into that later. But basically, in a nutshell, Fraser works with credit. He'll come back to the installers or Enphase if any additional information might be needed. But he gets the applications entered and communicates the credit decisions. And then he'll ask when you want documents. Right? When do you want us to send the customer documents? Is it now? You want to wait till you close the deal? Whatever it might be, he'll wait for your go ahead to get the documents out, and then he'll ask how the customer would prefer to have them sent. Do they want an attachment in an email where they could print it and sign it and scan it and send it back, or would they prefer DocuSign, which is a lot quicker and easier? So once the documents are requested, then Fraser will send that along to our contracts department, and they'll go ahead and get the documents out according to what's been requested. And Nikhil has introduced himself, so he's our Enphase contact. And I don't know if anything more needs to be said.
Yeah, so I manage the relationship here. Obviously, for installers who are interested, who work through our commercial sales team, I usually talk to you guys before you apply. I also do manage the Solargraph products for the financing side. So if you have any issues with the integration with BMO, usually send questions my way, but it's relatively automated in Solargraph at this point. If you don't have a Solargraph account and you're interested in, there will be an opportunity to sign up for that, and we'll try to get you onboarded. You can test it out, see if you like it. Once you're on Solargraph, you do not need to be underwritten like you would on the Resi side for offering a BMO loan. So right off the bat, you can start proposals and start presenting the BMO products to your customers. The underwriting for the installer happens at the same time when the underwriting happens for the end customer. So when you submit your application, you'll be submitting information about yourself as well as the customer. This will automatically go to Fraser and his team, and then he'll take a look, and once he has questions, he'll reach out for more information if need be. But yeah, I work on the Enphase side, the BMO guys work on the BMO side. We try to keep it a smooth partnership.
Yep, great. Next, there it is. Okay, so why would you use financing for commercial customers? And it's really a sales tool, right? So financing overcomes, the customers say, I don't have the cash, it's a $100,000 solution, $50,000, I don't have the cash, it's not in the budget. Then now you have the ability to offer a monthly payment, right? And they can spread the payments out over 7 years, 84 months. It also improves their cash flow, right? So if a company wants to just preserve their own cash flow, it makes sense to use somebody else's money. Every bank, every customer, every commercial customer pretty much has a line of credit with their bank. And lines of credit with their banks are usually earmarked for seasonal situations, or maybe to float payroll at times and things like that. Lines of credit are not typically earmarked for capital equipment acquisitions. So by using another finance source, it allows them to keep those lines of credit in place, allows them to keep their cash in the bank, which both should be used for other purposes. So we have two main products to offer. One is the dollar buyout lease, which is a full payout lease, similar to a loan. There's nothing on the back end. After 84 payments, the system is theirs. In fact, under that structure, the lessee is technically the owner of the system from the inception of the contract. So if there are tax incentives or things that the customer would like to take advantage of, they can do that with this type of structure if they're eligible. On the other hand, the First Amendment lease, that's a structure where it provides much lower payments. And again, it's still 84 months, but there's an early buyout option at 72 months. Now, if the customer exercises that, they get a figure and they can pay it off then. But if they don't exercise that option, the contract will go the full 84 months, and then there'll be a residual on the back end. that they can either pay in one lump sum or they can finance that as well, typically for 12 to 18 months. But we would need to approve that at the time. And unlike the dollar buyout, BMO is considered to be the owner for tax purposes. So if there are tax incentives that we're able to get, then then those are priced in, and we would take advantage of those if the customer selects the First Amendment lease. Okay, so the next slide is a little bit repetitive, but I think it's important. Next one up, I think, is it? Nikhil, types of leases. There you go. Oh, there you go. Thank you. So again, two types of leases. One's the capital lease, dollar buyout. The other one's the First Amendment lease. And this is just a side-by-side comparison to illustrate the differences of each. They're both 7 years, right? 84 months, although the First Amendment has the early buyout option at 72 months. The end of term on the dollar out is basic. I don't even think we bill $1. It probably costs us $100 to send out a $1 invoice, but it's one of those leasing structural terms. So it's a full payout, and the lessee is the owner for tax purposes, and they're responsible for maintaining the equipment. On the other hand, the First Amendment lease is again still 7 years, with a buyout option at 72 months, and we have an end of term residual that can be financed upon approval at the back end of 84 months. We're the owner for tax purposes. Again, still here, the lessee is responsible for maintaining the system. The biggest thing here, though, is the payments are a lot lower than on a capital lease, and below is just an illustration of that. And what it's telling us is that with a financed amount of $250,000, the payment would be about $4,000 for 7 years. On the other hand, the First Amendment lease payment is about half of that. And that's because we build in a residual to it, and we also take advantage of any kind of tax incentives that are available to us. Okay, next slide, please. So how does it work when a customer expresses an interest in financing? You just go into the SolarGraph tool and you submit an application through that tool. As soon as you hit go, the application comes to us, our inside sales folks, who's Fraser. And Fraser has backup folks too, who have access to the application mailbox. So if Fraser's on vacation or out sick or unavailable, maybe he's in meetings all day or something, we have other folks who can monitor that mailbox. So your applications won't sit without getting processed. At that point, the application gets entered, and then we communicate the credit decision both to Enphase and to the installer. If there's additional equipment or additional information needed, then that'll be communicated as well as an approval or a decline. It's at this stage where we approve the installer, and it's at this stage where we check our availability of investment tax credits. And that only pertains to the First Amendment lease. It doesn't apply to the dollar buyout lease. So at that point, documents go out, right, based on what the customer tells us. Do they, which structure do they want? How do they want them sent? Via email or DocuSign. Customer signs and returns the documents, and then we send our purchase order out to Enphase and the installer, so everybody's aware of what's going on. And then the installation begins And along the way, we will fund up to 3 milestone payments. So you'll share your contract with the customer so that we're aware of what triggers your milestone payments, how much they should be, and when they should be funded. The customer, by the way, has control over that, so they have to sign off on us to release the funds. After that, the contract commences after the last milestone is paid, and that's that. We bill and collect, and the contract is in place. Next slide, please. Okay, so the credit process is pretty simple. I had mentioned earlier that we have a software package that is a scorecard. It runs reports and things. So for smaller deals under 150,000, all we really need is a single-page credit application and the installer's proposal. If the deal is over 150,000, then we would need that application, the proposal, and 2 years of financial statements. They can either be financial statements, either preferably accountant prepared, but financial statements or business tax returns if the financial statements are not available, plus current interim financials. So, for example, customer applies this month, we would need year-end 2022, 2023, and the most current interims for 24, whether it's through the first quarter or whether it's through May, whatever the most recent interim financial statements are available, we would like those. And those are usually internally prepared, either through QuickBooks or whatever. They don't have to be audited or accountant reviewed. And that's pretty much it. So sometimes personal guarantees are required, in which case we would run the individual's credit bureau report, personal credit report. We also need to know who owns the property. Sometimes it's our lessee, and sometimes it's not. So we just need to know who that is, just so that we document the transaction correctly. And the credit approvals are good for 90 days. A lot of times these installations take longer than 90 days. We understand that. So if the project is taking longer than that, just let us know, and Fraser can work with credit to get those credit approvals extended. Next slide, please.
Hey, Chris, I'm going to pause here.
Yeah.
We have a few questions that have come up.
Okay,
so
good.
Can you explain in more detail what would drive a client to choose a capital lease over a First Amendment lease, or vice versa?
Well, if they have tax appetite, they would most likely select the capital lease. If they don't, then they would typically choose the First Amendment lease, because then we would take the tax benefits and they would benefit from the lower payments.
And I'm just showing the side-by-side where, as you can see with the capital lease, the lessee is the owner of the US of the system for tax purposes, and BMO on the First Amendment lease would be the owner of that. So that's probably the largest reason. The other reason is also because BMO does take ownership of the tax, they do pass that benefit on. So from a monthly expense purposes, the First Amendment lease is actually cheaper. So if that's the motivation, it is also more favorable to pick the First Amendment lease if you're just going on pure monthly costs.
Yep. Yeah, unless the tax advisor has said, "Hey, there are tax benefits we'd like to take," then the dollar buyout would be the best solution.
Okay, and then we have another question here, which is, what is the buyout due for the First Amendment lease? So I'm guessing at the end of the 72 months.
I'm
Yeah.
sorry. The question is, what is the buyout?
Yeah, for the First Amendment.
Like how much is it?
Correct.
It would probably, it's a good question. It's probably spelled out in the documentation, which I don't have in front of me, but it's probably the sum of the remaining payments, and maybe and probably the residual that we built into it.
Okay. All right. Let's keep going. I don't see any other questions. Oh wait. Give me 1 second. I'm trying to. Can you give us an example of the draw schedule for the process? I'm not sure what that means. Is that, I guess, could you talk a little bit about the milestone payments, Chris? And then
Yeah, sure.
Yeah,
this varies from installer to installer, but I think typically what we see is, there's a certain percentage of the transaction that's due at the time the contracts are signed, and the second milestone is due, at a certain phase of the construction. Maybe material acquisition, and then third upon completion. It varies, and it's really up to the installers. But and we're not too particular about that as long as there aren't more than 3 of them.
Yeah, and I've talked with a few installers about this. It's between you and the end customer, because at the end of the day, the end customer has to sign off whenever a draw is made. Right. So that's really the schedule there.
It's between the installer and the customer. Yeah.
And I think there's a little bit of a follow-up from Jimmy on the actual buyout. Do you have any specifics on how much the residual is left and
No.
how they can kind of model that?
I really can't comment on the residual. The residuals vary. We can only take a residual on the hardware.
Yeah.
There's installation and training, and maybe not training, but there's installation and delivery and all kinds of other soft costs that we can't take a residual on. So it really depends on the hardware soft cost mix of the transaction.
Hey, Chris, if I could inject here, this is Matt. Don't we normally on our Pro Lease on that product offer a 15% balloon at the buyout at the back end? So there's 15% of that amount is deferred to the end when the customer can then either purchase it outright or they can refinance that balloon amount for an additional term.
Yeah, I don't know if the 15% set in stone, but in our old Pro Lease product, it may have been that way.
Yeah, I think it was in the older product. I know they're looking at that now, but it was a 15%, and the customer had to purchase it at the end because there's not a lot of value in having your solar ripped off of your structure and returned to a bank.
There's no option to return. There's no option to return. It's either they buy it or continue to finance it.
Okay. Another question that came up is, and I'll take the lead on this for the moment, and then I'll pass it on to you, Chris and Matt. And for those who don't know, that's Matty Ford. He works with Chris at the BMO team as well. So the cost to the contractor to originate the loan itself. So this is similar to dealer fees, what it is. So I'll start this off as like, this partnership with BMO is essentially there is no dealer fee. You're not buying down a rate as you would on the resi side. Having said that, there are some fees associated with the contract, mainly administrative. Chris, do you want to talk about that a little bit?
Yeah, the only fee is really the documentation fee, which is paid at the front end. When when the documents are signed and returned.
And how much is that, Chris?
It's $1,500 at this point in time. The fees are constantly under construction and can change, but currently it's $1,500 at this point in time.
And that's
the customer pays that. Yeah, it's a flat fee.
Right?
Yeah,
Regardless of
yeah,
size.
yeah. It's a one-time flat fee, regardless of the transaction size, and the customer handles that.
A question here: what's the minimum loan size, and then do you have a maximum loan size while you're at it?
Boy, that's a good question.
Let's start with the minimum. I feel like that should be
I was thinking about that. Yeah, Matt, that'd be great.
Yeah, if I could inject, I would say that our minimum project it would be 150. The maximum, I don't know that we have an actual maximum that we will do. I think once you get above transactions, this is what I've seen anyway. Once you get above transactions that are in the, let's say near the $5 million mark or above $5 million in total cost, those oftentimes more than not seem to go through different financial products like power purchase agreements, because they tend to be larger scale and they tend to require longer financing terms. Typically the larger scale, kind of gets that. The stuff that we are providing, we see a lot of in small to medium sized businesses, rooftop, owner occupied. And so, most of what we see from a dollar perspective, you guys are good at translating that into kilowatts. Our average that we see is probably $300,000 to $750,000 is probably the average transaction that we see across our portfolio. We've seen a few deals that were at around the $10 million mark, but I would say that the lion's share of what we see with our offering and our program falls under $1 million.
And can I confirm the 150 is what your sweet spot is, right? I mean, there is a
sweet
slide
spot, yeah, but our
minimum's
more like $50,000 range.
Right. Just to confirm for everyone. Okay.
Yeah.
Let me just go through some more. Will BMO finance other items like roof coatings, electrical panel upgrades, or even batteries?
We will finance batteries.
Yeah.
We'll finance the batteries as part of that ecosystem. I'm sorry, what were the other two items you mentioned?
Roof coatings or panel upgrades, electrical panel upgrades as part of the solar system.
Probably as long as it's not the, more than a certain percentage of the overall cost. So, because what we don't want to finance is 80% of service and installation and stuff that's not really financeable content, that there's an actual asset included. And so, usually we get about 30% soft cost, I think is about the number that we're comfortable with.
Okay.
And if there's panel coatings or roof coatings or upgrading electrical boxes and panels, if electrical boxes and panels, that's really not soft cost. I mean, that's hardware, that's equipment. So yeah, we could probably do that. It just depends on the overall percentage. And I would say rule of thumb, the more challenging the customer's credit, the less likely we want to finance that kind of stuff. The better the customer credit, the more likely we would throw that stuff in.
Got it. Interesting question here that's come up. On a capital lease, can a client refinance if they choose to pay the principal down when they receive the tax incentive on the capital lease? So can they prepay it, and then can that
they could pay it off early.
Okay, so that's
right?
number one.
They can't make additional principal payments, right, like you would a mortgage or a car loan. But if they wanted to pay it off early, they could do that.
So just to confirm, that means they can prepay the full amount at any time, but you can't do partial prepayments, correct?
That's right.
Got it.
After 12 months. So, you know, within 12 months, they can't pay it off. But after 12 payments are received, then we would entertain a buyout offer.
Okay. There is a question on the installer approval process. We will get to that in a little bit. I'll make sure, Jimmy, that question gets answered in a second. Steve, you're asking again about the minimum project size. It's around $50,000 is probably the minimum loan amount that they could do, and you could size that accordingly. Then a question about Christian talking about they want to do a carport structure for a commercial client. Is the carport structure itself part of the finance?
Yes.
Can be financed? Yes.
Yes,
okay.
yes, we're doing one of those now in North Jersey.
Okay, what is the current interest rate today based on the best credit range? Not sure. Yeah.
I'm not sure if we could really answer that. I mean, the interest rates are fluctuating. They're competitive, very competitive. I think that's probably the best I can do at this point in time. Rates are higher. Everybody knows these days, and we hear that they're going to come down in the fourth quarter. But a wild guess, they're probably in the 8.5% range, depending on the credit, depending on the deal size.
Yeah. All right. In the interest of time, let's kind of keep going. I will go back to this page. I believe this is where we were at.
I think we tackled this one.
Okay.
The credit process, credit approvals are good for 90 days. Yeah. So the FAQs are some that we thought, you know, might come up. So we put a few of them in here. And I think this first one answers the question that we just had. What we do is when we get a credit application in, not only do we underwrite the customer's credit, but we take a look at the installer, and we run a series of reports done in Bradstreet and PayNet. And really, we're looking for mostly is just, you know, is it an established business? Has it been around for about 5 years? And what are these reports showing us? You know, hopefully no liens or judgments or, you know, suits. You know, is the installer paying the bills on time? Things like that. It's pretty high level. We don't get into finance. I guess if it's a huge transaction in the millions of dollars, we might dig a little deeper into the installer. But at this point, it's pretty high level at these lower dollar amounts, $50,000 to $250,000 range. 84 months is the oh, go ahead.
I'm just going to step in. So Kristen has a question on giving a bit more clarity on the expectations of what the client should, on how much the client would have to pay for a buyout at the end of the First Amendment lease. I'll take the lead on this one. So it really depends on the final documentation when the client gets and what their credit. For an estimation, it's usually, and this is again just a rough estimate, around 15% of the system cost is what they can expect. That number may fluctuate, but that's kind of, if you wanted to provide an expectation to the customer, that's what I would recommend. Chris or Matt, feel free to add.
I think that's safe to say.
Yeah. Okay, yeah. Sorry, Chris. I just wanted to tackle that one.
No, that's okay. That's okay. Another question that we provided information on here is nonprofits apply for both products. Well, anybody can apply for any product, really. We're underwriting, you know, the customer's credit, and it's up to them really to decide which product is the best for their purposes and their tax appetite.
And I'll add to that, it depends on what they're looking for. If they're looking for tax credit, then maybe they should be looking at the capital lease because they can own the system. If they're looking
Right.
for a lower monthly payment, the First Amendment product makes a lot of sense. If they
Hmm.
don't have any any tax appetite, the First Amendment product makes sense. So it really depends on what the customer is looking for. We're just trying to arm you with all the information so that you can help them get to the right product accordingly. Ultimately, some of these things, like if they want to take advantage of depreciation and all of that, it's probably best to talk to a tax specialist. Likely they might already have one. But yeah, that's kind of the we're just trying to arm you all with the information required to help the customer.
Yep. Thank you. The final question is, what do we do if the landlord is not our customer? And it's very simple. We would just put a landlord waiver as part of the documentation package, which basically just says, you're the renter of your property is going to put solar in, and it's not your system. It's our system, and the landlord signs off on that to acknowledge that.
Cool. I think this is the last slide.
Yeah, I think so. Yeah, just again, our contact information. Call me or email me anytime. Happy to answer questions. Fraser's contact information is there. Tiffany Thomas is our contracts person. She's always available to help. And then, of course, the Enphase email box if you have any questions for them. But always happy to help, always happy to answer questions. That's why we're here. We're here for you and your customers. And we look forward to working together and having a mutually beneficial relationship. So thank you.
Two questions that came up. First one, the recording will be shared, so don't worry about that. And the second one is, can a renter do either lease option? Is there any restriction on if a renter can take a First Amendment lease or a capital lease?
Well, I don't think it matters whether they're renting or whether they own the property. If their business has a tax appetite, then they would choose one product. If they don't have a tax appetite, then they would choose the other.
So to your question, Kristen, more directly, yes, a renter can do either one.
Yeah. Yeah, because it's the tax appetite relates to the nature of their business. Not whether they own the land or the building or not. Any other questions?
Cool. I don't see any coming through. If you have any questions, we'll kind of stick around for a couple of minutes. Feel free to chat it in the question box. But otherwise, thank you very much for attending. We will share this recording. This will get sent out. This is a good question that's come up from Jimmy. Turnaround times for underwriting. How long do you take to underwrite the customer and the installer?
Yeah, it's quick. And it's about to get faster. We're implementing a new system this summer that it will be super automated. But for now, it probably takes 4 hours, same day. It depends on if the application gets. I'm sorry. Go ahead.
No, I was just gonna say, as long as it's reasonable and you don't put it at 10 o'clock in the evening, I think it would be.
Yeah.
But we'll try to get to the same day. I think worst case scenario, you're looking at a week to kind of get a response back. It really depends as well on whether you have all the documentation together for everything, your financials, the customer's financials.
Right.
I've seen a lot of cases where that's usually what slows things down, not so much the actual decision itself.
Right. So for app only applications under 150,000, right? It's just we get a credit application that's completed and correctly, and if the scorecard likes it and approves it, it can happen by the time we receive it in the inbox to the time we get a decision in an hour or so. It takes time to enter it into the system and all that, but the actual scoring part is only takes a couple of minutes. But it's important when we get financials that yes, they're complete, and we don't have to go back and forth and ask for things. And then it could be a couple of days if it's only 150,000 or 200,000. It could be same day or next day, providing the information we get is complete. If it's $1 million or more, it might take a week.
This question, I'll take this one. When is funding dispersed? So Jeff, we kind of answered this before. The milestones are really between you and the customer. The preference, BMO doesn't have specific milestones. The preference from the BMO side is to have a max of 3. I think I've seen 4 at times, but the usual milestones, it's between you and the customer. The customer has to sign off on each of the milestone payments. So like say you did equipment install, the customer has to verify that the system's been installed before the funds are actually released to you as the installer. So it depends. I know I hate that answer, but that really is the answer here.
Yeah, so you would send us an invoice, and then we would say, great, got an invoice, and we'd send it to the customer and say here's the sign off. We got an invoice from your installer. Here it is. Please sign this and return it if it's okay to release the funds. And then we do it then.
All right, I'll wait 1 more minute if you have any last minute questions you want to ask. All right, then let's call it there. Thank you very much for attending. Chris and team, thank you so much for interacting directly with our installers. Really appreciate it.
Thank you for having us. Thank you to all the installers who have dialed in. We appreciate it.
All right. Thanks, everyone. Have a good day.
All right. Have a great day. Take care.